Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. Apologies for missing yesterday, but I had some family issues to take care of. My dad had some issues, actually a small mini stroke there on Father's Day late about 8 p.m. So I needed to be around the house yesterday to talk to my mom and make sure she was all right. So I was not here yesterday, but again, family comes first in my opinion. We are going to look at Louisiana Pacific though on this one today out of the industrial sector. All right, before we get too far in the video, if you could hit all the buttons down below, it only takes a couple seconds of your time. It is free to do so, but it really does help out a small YouTube channel like mine. The thumbs up button, the subscribe button, join us on this journey to financial freedom, join the Vested Interest community, click the notification bell as well. There is the if you want to use the tip button down below, buy me a cup of tea. There is a way to help the channel financially that way. Dropping a comment helps as well, and sharing the videos with anyone that you think might find value in the content, and watch time. The one last thing that the YouTube algorithm looks at is watch time. So if you could watch the videos to the end, I would really appreciate it. Thank you. Special thank you to the viewers and subscribers of the channel. You guys and gals are awesome. The channel continues to grow because of people like you. Over 1,300 subscribers now. On to 2,000 we go, and I'm only going to get there with your help. Now, this is the vested interest stock screener. This is the criteria we are going to run through in this video. It must meet 5 of 8 to make it onto my watch list, or 6 of 9 if it was a company out of the financial sector. This one is out of the industrial sector, so that will not apply. And price to book being 1, fair value does not really work for companies outside the financial sector like banks. So don't blindly use price to book with 1 being fair value. If you're using price to book, look at the company's price to book over time, a year, 2 years, 3 years, compare it to where it's at currently, and then you can also compare it to other companies in a similar sector or in the same sector doing the same type of business. All right, back to Louisiana Pacific. Here you can check them out on their homepage, lpcorp.com. That's lpcorp.com. That is their homepage where I pulled this information from. A history of innovation, and they've been around for 50 years. Our innovative products have radically shaped the building industry, and that is really what they are providing, building materials, and continue to shape our own future as a company. And when we do it just right, we create entirely new solutions. Take our original and best-selling oriented strand board, or what most people know as OSB. That might be your exterior walls, your flooring boards. We've incorporated strand technology into many of our building solutions, such as the LP top-notch subflooring series. There you go, subflooring, so it might be underneath your tile or your carpet in your house. Flame block, fire-resisted OSB, LP smart side for trim and siding, so that would be on the walls, right, underneath your brick or siding, whatever you've got on the exterior facade. Premium subflooring, Tech Shield radiant barrier sheathing, and LP NovaCore thermal insulated panel. So that might be a pre-fabbed panel that you use instead of a wall system, instead of a stick-built 2x6 or 2x4 framed. On top of that, we've added technology to help make certain products either more moisture resistant, flame spread, and fire resistant, or resistant to heat transfer. We've also added technology that adds fungal decay and termite resistant benefits to a section of our products to help ensure your home is protected from those pests that may get in. Today, LP is continuously working toward the future of building. We're creating stronger, longer lasting, and more innovative products while focusing on protecting the environment. We are committed to developing products engineered to perform and build to stand the test of time. So, building products, you can see here some of their products under their homepage there: siding and trim, outdoor living, concrete edging. You can go and check all the rest of them out. Panels and sheathing, which we just talked about, subflooring we just talked about, accessories, and structural solutions. Again, you can check out all that on their homepage if you want to know more about the products that they provide, but they are really a buildings product provider. So that means they are going to be impacted by the cyclicality of the building sector. When homes are really flying out there and home buildings really crushing it, a company like this is probably going to do very well. This would be very similar to a company that I hold in my portfolio, Owens Corning, which also provides a little bit different building products, but building products nonetheless, which is also impacted by the cyclicality of the building and construction industry, right? All right, the reason we are taking a look at them, down 2.91% on the day. We are talking about Louisiana Pacific Corporation, ticker LPX, out of the industrial sector. Again, a buildings supply provider. $85.95 is where they closed out the day. 52-week range as low as $78.82, as high as $122. Oops, sorry. $78.82 as high as $122.87. Their LPX is their ticker. But they are within 15% of a 52-week low and currently much closer to their 52-week low than their 52-week high. They have a market cap of $5.974 billion, a beta of 1.88. That means they are almost twice as volatile as the overall market. You may be able to use that volatility to your advantage, buying when they have the big dips, holding whenever they go on run-ups. PE, price earnings ratio, is $15.03 per share. Earnings per share, EPS, is $5.71 per share. Earnings date coming up sometime in the window of August 5th to August 11th. They currently have a forward dividend of 1.2 or dividend yield of 1.27% with a forward dividend of $1.12. They are a quarterly payer, so you can divide by 4, or you can wait till a little bit later in the video where we will go over their cost per share per quarter. Ex-dividend date May 20th. So we are past that since we're already in June. Looks like they paid out June 3rd. So you would be in line for the next dividend if you were to buy them now, but you're going to have to wait a couple months to get it. One-year target estimate is $104. So Yahoo Finance, where I pulled this information from, does see some upside from where it's at currently, but not quite getting back to its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. It is just a quick check. It is not a discounted cash flow analysis or a deep dive into the financials of the company. Or a way to really value the company. It is just a quick metric to check that you don't really need to do any math to kind of use. And to do that, you look at their 5-year dividend yield average, 1.31%. You compare it to their current forward annual, or over here, forward dividend, same number, 1.27%. Since their current dividend yield is lower than their 5-year average, that actually speaks to overvaluation. These numbers are inversely correlated. That means if it's lower, like it is, than their 5-year average, that speaks to overvaluation. If this number was higher than their 5-year average, that would speak to undervaluation. Currently, this one is potentially overvalued. Payout ratio at 18.56% is much lower than the 75% that I'm looking for there. So it gives them plenty of room to continue to raise that dividend. Does not look like they are in danger of a dividend cut. Dropping down to free cash flow, I want growing free cash flow over time because companies can do some things with those funds. They can make acquisitions, reinvest back into the business. Keep some cash on the balance sheet if they choose to do so. Buy back shares, which looks like this company is doing. Pay a dividend, which this company does, and raise that dividend over time. We want the company to be doing all of those things as well as paying down debt. Free cash flow going back to December 2022, $730 million here. December 2023 looks like a big drop down to $16 million. 2024 back up to $422 million, trailing 12 months, $358 million. Keep in mind, trailing 12 months, since we're only in the middle of June, does really account for half of a year of 2024 numbers. So we'll have to wait to see the rest of 2025, how it shakes out. Jumping over to stockanalysis.com, this is another source I go to for information. Again, not affiliated with stockanalysis.com or Yahoo Finance, just 2 sources I go to. And I do recommend that you look at more than 1 source, 2 if not 3, so you can make sure the information you are looking at is accurate and up to date. And this is part of the reason why. You see, price targets were last updated on May 7th, 2025. So that means they are already a little over a month outdated. But we're going to look at them anyway. 8 analysts have taken a look at this. Back in May on the 7th, they called it a potential buy, right there on the edge of a hold and a buy. If you were to go to stockanalysis.com, you could click on each one of these tabs, see how many of the 8 might call it a strong sell, a hold, a buy, or a strong buy. But the consensus of the 8, which just means the majority, call it a strong buy, right? And they have a low estimate of $12.20, they have a low estimate of $75, which would represent a 12.27% decrease from where it currently sits. Average estimate of $108.13, that would represent a 26.48% increase from where it currently sits. Pretty close to what we saw at 104 and some change from Yahoo Finance on the previous page. And if it happened to hit their high estimate, $123, that would be a 43.88% increase. That would also be a little bit higher than their 52-week low, I believe. So they'd be setting a new 52-week high. They'd be setting a new 52-week high if they hit this 123 or very close to it. Jumping over to some statistics, I like to look at return on capital employed to see how well the company is reinvesting its capital back into itself. And I like 10% or better here. They are just a tick below that at 9.87%, so just under that 10% I'm looking for. EPS growth, I like 5% or better forecasted over the next 5 years. They're at 15.72%, so almost a little over 3 times what I'm looking for there in EPS growth, and their revenue growth is forecasted at 5.2%. This is more of a deep dive number. I look at revenue whenever I'm doing a deep dive into the financials of the company. in their balance sheet, income statement, that sort of thing. But I like to include it here because it's right above EPS, so why not? Why not? I'm snipping EPS anyway. It doesn't take me any more time to snip revenue growth. Now, their dividend history, quarterly payout, as I mentioned, a dividend payout ratio of 19.61%, dividend growth at 8%, nice single-digit growth there, just under 10%, 7 years of growth, buyback yield is positive at 2.08%. They are pulling out more shares than they are issuing. We want to see that buyback yield positive. If this was a negative, it means they are issuing more shares than they are buying back, or just issuing shares and not buying back any. Shareholder yield is positive at 3.35%. We want to see that positive as well. They do pay out, like most companies, on the March, May, August, November time frame. March, June, September, November. So sometimes that one of the dates might slip a little bit, but this is pretty close to what the typical payouts that start in March look like. Going back in time here, looking November 8th, 2022, they had 22 cents per share. They announced March 9th, 2023. They raised that up to 24 cents. November 2020, or I'm sorry, August. No, that was right. February 2022, 2024, they raised it up to 26 cents. And then February 27, they raised it up to 28 cents. They don't seem to have a consistent date that they raise it. Looks like it was March here, February here, February. So maybe it is consistent. Right around that February, March report out, ex-dividend is whenever they raise it. So I would anticipate either February or March of 2026 would be their next raise if they're going to maintain their dividend growth, which they should with only a 19.61% payout ratio. All right, let's get back to the screener. Understand the business. Again, they are supplying some pretty standard construction material, your sheathing, whether that's flooring, whether that's wallboard, some other things as well, but pretty much construction materials. Growing free cash flow, no. We had a couple down years or up and down. Growing dividend, yes. Nice 8% dividend growth, at least the last one. Dividend payout ratio is well under 75%. It's under 20% actually, so very low payout ratio. Dividend yield theory says they are potentially overvalued, so no check there. It is within 15% of a 52-week low, so check there. Return on capital was just under 10%. Even at 9.8, it doesn't quite get to 10%, so no check there. Earnings per share growth was over 5%, so check there. So we're looking at 1, 2, 3, 4, 5 of 8. This one, I believe this one is on my watch list already. I kind of went with Owens Corning in this space, but if you were looking for a company that provides building materials, as long as you're willing to ride out some of the ups and downs associated, because again, these companies will be impacted whenever building slows down, commercial or residential building slows down, because I believe they provide materials for both. So Louisiana products, again, if we have a slowdown in the home building sector, commercial building, it will impact companies like this. But you got to keep in mind, we have a lot of issues out there in the United States. Stuff like the California wildfires, they're going to be rebuilding a lot of houses out there. We're in the middle of hurricane season, or maybe right towards the tail end of that. So you've got homes that are destroyed by that will need to be rebuilt. Flooding, whenever there's flooding, and we've seen some recent flooding here in the United States, those homes will have to be rebuilt. So even during downturns, these companies are providing materials for that type. But overall, if we have a big downturn in the economy where a lot of new houses are kind of put on hold and not being built, these companies will suffer a little bit. All right, well, that is Louisiana Pacific. Let me know what you think of the business in the comment section down below. Is it one you're looking to buy? Is it one you are selling? Maybe you're part of the reason it was down today. Is it one you're holding on, waiting for a better price? Let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment. Let me know what you think of the video. Let me know what you think of Louisiana Pacific. And if you have a company like this you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section down below. These videos are really for you guys and gals out there. So if you have companies you'd like me to look at that pay dividends, I'm focused on companies that pay dividends. I am a dividend growth investor. But drop them down there. I'll try to work them into the rotation on a day it pulls back. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have one, drop it down there. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Again, apologies for not being here yesterday. I just had some family things that I needed to take care of, and that's going to happen from time to time. My family comes first. It always is going to be that way. But appreciate all of you who've tuned in today and who tune in day after day to the videos. Really do appreciate that. All right, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journal, educational, and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice and counsel of a certified financial advisor. Hey, for those of you who made it to the end of the video, thank you for watching the videos to the end. Watch time is a big one the YouTube algorithm does look at. Don't forget to hit the subscribe button if you have not done so. Make sure to like the video, share with anyone you think that might find value in the content. Drop a comment, let me know what you think, and we will see you in the next one.